Good morning, ladies and gentlemen, and a very, very warm welcome to the IIG Insights session, Unmasking SA's Real Tax Rate. Ladies and gentlemen, it gives me such great pleasure to please introduce Tshepiso Chocho, the President of the Insurance Institute of Gauteng, who will please come forward and do a short introduction. Thank you very much, Tshepiso. Over to you.
Thank you so much, Christina. Good morning, everyone, and I hope everyone is well wherever you may be. We welcome you today and thank you for joining us this morning. And if you're a regular on our virtual insight sessions, we thank you for the support that you've shown us throughout this year. Thank you for keeping the connection with the IIG. As Christina has said, my name is Tshepiso Chocho. I am the president of the IIG, but by day, I'm the executive manager for people at Sasria. Today is a second partnership that we have had with GIFs on our insight sessions. The Be the Difference theme really resonates with them, and we can see that. We see it from the topics that they have brought to the fore. They're really bringing conversations that matter. And for us, as the non-life insurance community, it's good conversations for us to engage on. The title of today's webinar is Unmasking SA's Real Tax Rate. We will be talking about everything that we should personally know about taxes. We are hoping that after this session, you will understand that the real taxes that you pay and hopefully be able to shift some things around to better your finances. We ask you to please engage with us on our social media platforms and remember to tag the IIG and GIFs and use hashtag GIFs, hashtag your IIG, hashtag Be the Difference. Tell us how you are enjoying the conversation and what you are learning from today. The session is CPD accredited. Please be sure to get your CPD certificate from the CPD Vault on our IIG website. Should you have any queries or troubles around your CPD, please do reach out to us on email, info@iig.co.za. I'm now going to hand over back to Christina, who's going to introduce the speakers of the day for us. Thank you, Christina.
Fantastic. Thank you so very much, Tshepiso. It's always such an honor to be able to be introduced by the President of the Insurance Institute of Gauteng. Right, ladies and gentlemen, so let's move over to the introductions for your moderator and the individuals going to be a part of the session. So I would like to now introduce none other than Dr. Kirshen Pillay, CEO for the Graduate Institute of Financial Sciences. Dr. Kirshen Pillay is regarded as one of the foremost thought leaders and an education trailblazer and visionary. He is deeply committed to mobilizing the power of education to create a better Africa for others to inherit. Kirshen is an astute innovator who is nationally acknowledged and respected for his consistent efforts to level the socio-economic playing fields by making quality education available to all. As a result, he was named the TYI Top 100 Young African Innovators of 2018. The accolade is one of many commendations from business and industry bodies that recognize Kirshen's contributions to business, his foresight and vision, his achievements, as well as his future fit approach to education. These include being named a National Business Award finalist in 2017 and a finalist in the Entrepreneur of the Year and Young Achiever categories in the coveted National Oliver Top Awards in 2017, 2018, and yes, ladies and gentlemen, in 2019 as well. Dr. Kirshen Pillay, it is such an honor to be able to introduce you today. Thank you so very much. If we could please hand over to you. Thank you.
Thank you, Christina, and thank you for that very confidence-boosting introduction. Good morning, IIG community, and thank you for joining us today. Following suit from our previous Insight session, our aim is to challenge the status quo and to bring to light matters unspoken. With tax season upon us today, we stare the tax man straight in the eye and unmask South Africa's real tax rate. Ladies and gentlemen, brace yourselves as the truth may shock you. Joining us today in a no-holds-barred conversation and to share some insight on South Africa's real tax rate is a very familiar face in matters relating to tax, and one of South Africa's most sought-after tax specialists, former Director of Tax Services at KPMG and current Director at Creston South Africa, Johan Heidenreich. With over 30 years of experience in tax services, we cannot wait for Johan to demystify this three-letter word called tax. Welcome, Johan, and thank you for joining us today.
Thank you so much, Gershon. Appreciate the introduction, and thank you for having me as a co-panelist on today's discussion. Thank you so much.
Pleasure. So, Johan, let's sink our teeth into this. As human beings, before we do something, we need to find out why. So the question begs, why do we pay taxes? So as South Africans, we pay taxes to fund public spending so that roads and infrastructure such as electricity substations and wind farms can be built and maintained. We pay taxes so we can have access to quality schooling and universities, hospital care. We pay taxes for security services such as effective policing. So is it fair to ask, and audience, please comment in the chat box. I'd love to hear from you. So is it fair to ask, why is it that we as South Africans opt for private schooling over public schooling? On top of our tax contributions, we have to incur additional expenses such as medical aids and gap covers, as our public hospitals are never our first option. Why do we pay exorbitant costs for private securities and levies for security estate living? Something doesn't add up. Do you agree? So,
yeah, thank you, Gershon. I think this is such an interesting topic, and when I explain this, I always say that a country is like a family, and I always use my own scenario as a bit of an analogy to how it's supposed to work. So in my family, I've been married for 30 years. I've got 4 children, and then within that family, and I've got 2 disabled children. One child is a teenager, and one child is working as a teacher. My wife's a teacher, and I've got my mother-in-law staying with us. And in that family, primarily it's myself and my wife bringing in income. Unfortunately, teachers doesn't bring so much income in it. And when you look at the family finances, you look at where the needs are, and you look at how you spend it. And ultimately, it's in my best interest that my son, who's at high school, must study very hard, and he must be successful so that he can become economically active. It is in my best interest that my mother-in-law is well cared for, and that my children that will never be economically active are also looked after well. So you spend your money for the benefit of everybody. It's because of my own best interest as well. But the same thing is when I get there and I get at home and all the lights are on, I get angry because there's a wastage of electricity. When I get there, my wife has made a nice meal. My son says, no, he's not hungry because he's eaten a pizza. I get very, very angry. And in the same token, when I employ somebody to look after children and they do not rock up for work, I get very, very angry about those things. And I think the same thing applies in a country. In a country, there are people that are fortunate enough to have jobs, that have the ability to generate income. Unfortunately, in South Africa, we are very few. There are very few of us, and as we'll explain later on. And in this country, there are people that it's in our best interest that the children in this country get educated, that they become economically active, that they do not leave the country after we have trained them. It's in our best interest that the old people are looked after and that they are cared after. It's in our best interest that that people become economically active. By same token, it's in the best interest of an employee that a company is successful, that an employer is successful, because that generates more wealth. And I think once we start thinking about the fact that we're all interlinked, then, and it's all in our best interest that people are successful, that they contribute more to the coffers, but also that money is spent wisely. And I think the problem today is the things that you mentioned is that you pay all this money and you are rightfully angry if, similarly to my son now eating a pizza, instead of actually eating the food that we put on the table, that there's wastage. We should get angry if there's not proper schooling that's paid for. We should get angry if the municipal infrastructure is decaying. We should get angry when the health system is not being upheld. And I think that is really the core of where we are. And I think as members of the South African family, which we all are, we should be concerned and we should express our voices so that we should demand more of all of this. So maybe we should start off obviously in a small family. Sorry.
So Johan, if I could just step in there, because I'm having a look at the chat box and there's some really, really interesting comments coming through. For example, we have people saying that, and let's have a look where this message has now gone to. Well, in summary, we have Tanya, who basically says, I have no problem paying tax, but would love to see it used efficiently and effectively. And that's the common denominator, or the common feeling amongst all South Africans. So Jan, if I could ask this question of you, SA's tax rate is one of the highest in the world. While other countries reap the rewards of paying higher taxes in the form of free social services, South Africa fails to deliver even in the most basic services at a national level. The indirect tax burden comes in the form of private costs of health, education, and security, as I've already mentioned. So what percentage of income do you think is fair for an average South African taxpayer to pay to have the standard of living that is envisioned in our constitution?
Thank you, Kirsten. So perhaps we can move to the next slide, because obviously there are two sides of the coin. There's the one side of the collection side, and we've got to first say what types of taxes are we paying, and then the other side of the coin is how they get spent. So bear with us a little bit, because we're addressing both sides of the coin. So the starting point, we look at where does the taxes come from, and is it equitable, is it non-equitable, because you want to have an equitable equitable tax system. Just a quick comment on how that I don't want 1 single cent of the money that I contribute to tax coffers to be wasted, to be spent on, and it will be shocking, as we will explore later today, the report of the Auditor General on how much money actually does get wasted in South Africa. And so it's not just necessarily about paying the money, but if the money gets spent wisely, then it's okay. Then at least we get something for our money, for our collective benefit. But if there's such widespread problems with that area. But let's start with the one side of the coin. The major type of taxes, contributing 82% of South Africans' revenue, is personal income tax, which you could add the dividend tax with. That's about 40% of the total budgeted revenue. VAT, that's about 27%, and corporate income tax, that's about 15%. And I'll talk about the corporate income tax a bit later, because that's a huge area of concern where we are now. It's only 15% of the total coffers. And then there's the other things. There's things that makes us angry. It's the hidden taxes like sugar tax and your sin taxes and all of those kind of things. Particularly something like a sugar tax. It's a bit of a sneaky tax, because they put it in as if it's good for you, but now they just change the sugar with aspartame, which I think is perhaps worse for you. But it's just another way to collect money. But at the end of the day, money must be collected, and this is the way in which it's collected. So let's go to each one of them and see whether they are really out of line with the global trends of tax collections. So in the next slide, we will explore the corporate income tax rates. But this is just an extract from our budgeted revenue. And this just shows off the 1.3 trillion budgeted revenue that we have for 2022, how it's made up. Personal income tax by far making up the biggest chunk of it, 500 billion, and that is about 40% of the total. So let's go on to the next slide, where we then go into corporate tax into much more detail. So you can see this is corporate tax rates around the world. And it's very interesting to see that over the last 20 years or so, the maximum corporate tax rates actually went down quite dramatically, from about 43% average to about 23% average now over the last 40 years. And you can see that South Africa is not way above it. And our rate is going to reduce from 28% to 27% for years of assessment commencing 1 April 2022. So our corporate tax rate in itself, if you make it too high, then people don't invest. Being at 27%, it's not way out. And you don't find many international investors that say, listen, I'm not going to invest because it's 27 or 28%. There are other factors that plays a more important role. So if you look at the next slide, you will find that this is findings from the Tax Foundation, which is an organization in the US. And essentially, they look at the corporate tax rate in various regions. From Africa perspective, we're more or less in the middle, where the average is 28.5%. Europe is the lowest, is about 20%. But you can find that, as they say here, over the past 40 years, it's really declined quite dramatically. So the corporate tax rate in itself is not necessarily a problem for even anybody when you look at the tax rate. The problem that we do find a corporate tax rate is that in 2010, it made up 24% of the national budget. In 2022, it's 15%. That's a massive drop. If you were to convert that into money, it's about 212 billion rands out of the budget. If we had that extra percentage income in the 2022 budget, it would have been 212 billion. What's one of those big reasons for this decline? And one of the biggest reasons is the fact that the world is different. In the old days, you pay tax on where you are. So if you're a musician and you live in Belgium and you write a song, you'll pay tax in Belgium, no matter where you sell it. And that's the way tax systems works. If you're in South Africa and you've written a song, you'll pay tax in South Africa on the worldwide income that there is. But now, with the digitization of the economy, it makes less and less sense. So you have companies making money in South Africa that doesn't pay 1 single cent of income tax in South Africa. And that's a massive concern. So if we can go to the next slide, Christina, then I can just show you what the impact of that has been. So National Treasury, in the national budget of this year, Tito Mboweni has said that South Africa is a member of the steering group of the inclusive framework, which is examining income tax challenges associated with the digitization of the economy. What people are looking for is to say, look at multinationals and saying, we are going to tax you where you're economically active. We're going to tax a bit of your profits where you are earning your income, and not necessarily where your offices are, where you're generating, where you're actually creating the business. So you're thinking of places like Uber, you're thinking about places like Kindle, Apple Music, all of these places. They don't pay income tax in South Africa. They register for VAT purposes in South Africa. But if we can bring that into the South African net, then things will work much better. But this is one of the biggest challenges of the global tax policy makers, is how to tax this digitized economy that we have. South Africa is saying is, if this collective approach is not working, then we will consider a unilateral approach. But some kind of taxes is going to happen, income taxes is going to happen on that. But corporate income tax, I think, should have a bigger influence in the South African state coffers than it should, not necessarily at the expense, and actually to the benefit of us South Africans living in South Africa, because there are so many non-residents actually operating in South Africa without paying every single cent of tax. So that's a corporate income tax rate. The next big tax rate making a big difference is value-added tax. So Christina, if you can just scroll to the next slide, we can see at what the average, or what the, it is average VAT rate in the OECD countries are. Many countries have got dual rates. South Africa actually do have a dual rate. We've got a 0 rate and we've got a standard rate of 15%. Many countries have got 3 rates. So for example, luxury goods will be at 25%, the normal rate will be at 17%. But as you can see there, a rate of 15% is kind of like, okay, it's not that high. The thing about VAT is actually a very good way of bringing in tax, because firstly, you have a bit of a choice in whether you're going to buy something or not. It's equitable across the framework, and you 0 rate certain specific things. So for example, basic foodstuffs and even sanitary products that are 0 rated. So from the perspective of the VAT system, the 15% is also not necessarily a major issue from South African perspective. Obviously, when we increased it from 14 to 15%, there was also a big backlash because that affected the impact of on the economy, and it does impact the lower income people more than it impacts the more wealthy people. So the VAT side is not necessarily out of line with the rest of the world. If anything, is perhaps slightly on the low side. So now we get to the big bugbear of the big issue, and that is personal income taxes. So if we look at the personal income taxes, it's not just what I am saying, but this is an extract from Tito Mbowene's speech in February in the national budget speech. And they are saying, not I'm saying, they are saying that we are one of the highest paid taxes from a personal income tax perspective in the world. And as you can see there on that little graph, which comes out of chapter 4 of the budgets that you can find on National Treasury's website, our little red button there is exceptionally high. We do have a very high personal income tax rate, not just necessarily the 45%, but also the level at which it kicks in. It kicks in at around 1.5 million, and thereafter you pay tax at 45%. But it kicks in at a very low level, but also 41% you hit it at a low level as well. So that is really where our problem lies. And to exacerbate that problem, it is not just the rate schedule that's a problem, but let's look at the reliance on very few individuals. So Christina, if you can go to the next slide, which is an exceptionally worrying slide if you look at it from a South African perspective. That little block there that's highlighted in red, and that's also an extract from the National Treasury budget documentation. Literally 534,000 people out of the 14 million registered taxpayers. So we've got 40 million registered taxpayers in South Africa. 7 million of them don't pay any tax because they are below the threshold. So the banners do pay any tax. But of that 40 million, 534,000 of them are contributing 50.7% of the total personal income tax take. That's massive. That's an exceptionally high reliance on a very few individuals. Put that differently, it's over 22% of the entire budget. It's reliant on 534,000 people. Now, if you look at that 534,000 people, there are people that's earning more than 750,000 Rand a year. By international standards, that's not necessarily that high. Okay, but there's very few people. So it shows you a number of issues. It shows you the inequalities in South Africa. It shows you also that we have not managed to put more people into the pot. And it must be such a priority to make our people economically active. We need to be able to put the people that are earning below 80,000 into the level earning above 150,000. And the people above 150,000, just push them up and push them up and push them up so that we can increase that number. Those are also the people that have access to good tax lawyers and they can externalize the funds. Those are the people that feel in many instances that they're not cared for. They are not loved. They are not valued in the country. So they take their things and they immigrate. And that number gets less. And I've looked at that number 10 years ago and I've looked at the number now, and it's worrying that relatively that number is growing less. And so it's a big area of concern, and the government itself is recognizing that. And if you follow the previous slide, I highlighted a bit out of red and I said, it's a very important focus of government to reduce the rate. So they're saying they're recognizing the rate is too high, but government itself is saying this rate is too high. Government itself is saying we can't increase it. We need money for COVID-19, but we can't increase it. It's already absurdly high. We have to decrease it, but how do we decrease it? We decrease it by increasing economic activity. We increase it by broadening the base, and that must absolutely be a principle for us. So that's really when we are looking at the collections side. We are okay from a corporate side. We're okay from the VAT side. We are really in desperate issues on the personal income tax side, and we are so reliant on a country and very few people that can't be sustainable in any point of form. So let's go on, and then we look at what Pravin Gordhan in 2016 was actually saying. And I actually agree with what he said in 2016. He said South Africa has a very effective SARS department. And yes, there were efforts by previous people to undermine it, but we've currently got an excellent Commissioner of Inland Revenue. He surrounded himself with excellent, experienced people. And by all international means, the technology is world-class, and it is a very good collections agency in the world. And often we feel, okay, let's bash SARS, and yes, in the COVID, we're struggling to get things done often, but they are tasked with collecting money. But Pravin Gordhan also said, he said, people are generally tax compliant in South Africa. The vast majority of people pay their taxes. They don't want to avoid it. But it's an obligation. There's a corresponding obligation on government to spend that money wisely. And how true is that? How true is it? But all the efforts, if I look at all the various government departments, there was a lot of effort placed into making SARS world-class. And it is world-class. I have no doubt about it. It is world-class collection agency. But unfortunately, and when you look at the reports from the Auditor General and so on, you can't say the rest of many of the other departments. So that is really the problem where we are stuck in. We are paying, as taxpayers, we are paying money, but where does it go? So let's look at not what I'm saying, but let's look at what the Auditor General is saying, and let's pop on to some of the other slides. So just how do we address this problem? Firstly, we have to address the issue of the corporate tax system and the digitization of the economy. We can generate a bucket load of extra money from non-residents in South Africa who are economically active in South Africa. That's the first thing. There's a lack of sufficiently active South Africans contributing to the personal income tax contribution. That 534,000 number is just ridiculously low. It's just ridiculous. And this is really the point, that the high level of fruitless and wasteful expenditures at government level must be addressed. Now, Pravin Gordhan also said in the 2016 budget, he said that the higher the corruption, the lower tax morality. That's just a fact. There is a vicious downward spiral. If there is corruption, there is lower tax morality. People are morally more inclined to pay the taxes if they believe that they're getting something for their money. And Christian, that's really where you came from the start. A person that says, listen, if I'm paying money, morally it's okay. But in South Africa, we kind of like pay tax because there's an understatement penalty regime that will get you into jail and that will get you up to 200% penalties. So you're doing your compliance matter not because you believe it's the right thing to do, because you believe a bucket load of that money gets wasted. You do it because out of fear. And SARS have played on that fear, because believe you me, SARS is out there to get you. And if they find you, and SARS have won 80% of the appeal court cases of the last 2 years, they are on a roll and they are winning the battle against the taxpayer, because the government has spared no expenses in bolstering the SARS ability to get the money out of you. Have no doubt about that. So people are scared for non-compliance. Big companies are scared of non-compliance. Individuals are scared of non-compliance because they're actively looking at it. They're creating a specialized unit looking after high net worth individuals, people who have externalized their monies, perhaps sometimes a bit sailing close to the wind. So we've got to be very careful, but our tax morality in South Africa is not because I feel it's the right thing and I'm doing something for somebody in my family. When you look at the poverty is not being alleviated, you're looking at the children are not being educated, you're looking at people are not rocking up for work, but yet they are getting paid. So you're not paying your taxes because you believe it's the right moral thing to do. You're paying the taxes because you're scared. That's a simple point of it. So let's look at where the money actually does go. And again, it's not what I'm saying. Let's see what the Auditor General are saying. So Christina, if you can just scroll to the next one. I've analyzed the consolidated general report of the Auditor General. Do yourself a favor, go into the Auditor General's website. It's an excellent website. And firstly, as I went through it, I was actually quite pleased with the scope and the honesty that's in those reports. No, you're talking about no holds barred. You know, the Auditor General is really independent in all of this. They're calling a spade a spade. And it's a bit shocking when you look at everything that is in there. So I've taken a few snapshot pictures out of it. So let's look at where we are. So what I've said here is we're SARS a world-class environment. I just hoped that government would spend the same effort to they've spent so much money to collect the money. just spend some money to spend it properly. That's all I'm asking. And I don't think that is too much to ask. So look at this. So let's go to the next slide. And in that one, I've just taken snapshot pictures out of it. Very, very worrying. Unauthorized, irregular, and fruitless or wasteful expenditure. That's 1 year. Unauthorized expenditures, 18 billion. Irregular expenditures, 54 billion. Fruitless and wasteful expenditures, 2 billion. The nature of it is under procurement. Now, procurement, then there's tender fraud and all of those kind of things. Expenditure management, revenue management, resource management. There are problems everywhere. Problems galore across the board. So let's go to the next slide. The system, it doesn't get better. The financial health, not really that well. Cash shortfall department, 16 billion. Unpaid claims, 147 billion. Deficits, 92 billion. Average creditor payments, 48 days. Probably want that closer to 30 days. But look at this. Vulnerable financial positions, 9% of the departments. 36% of the state-owned entities are in a vulnerable financial position, and 10% of other public entities. What's the reason for this? Status of controls. You're looking at 50% on overall internal controls, 49% in quality of leadership, and the shocking 43% basic financial and performance management, basic skill sets. So we're looking at this. Everybody that's participating in this can get a CPD point. I'm a chartered accountant. I'm a registered tax practitioner. If I don't have my CPD, I lose my qualifications. Why is there not some kind of education for people that get into government? Why is there not some kind of compulsory? Yes, I know many of those people that are there were denied proper education, but they are not denied an effort for us to make sure that they are properly trained in their positions. If somebody gets to a position and he doesn't have the academic background, then please train them to get that background. I'm not saying don't appoint the people, but make sure that they get to that point. So it's a significant lack of control and basic control. So let's go to the next slide. So under this one, they're looking at the root causes of problems. There is 89%, even though the Auditor General reports year on year and year, just 89% are just not caring. They just do nothing. Slow or no response in improving internal controls and addressing risk areas. So 89% of the risk areas is, yeah, thank you for doing the audit. We'll just go on our merry ways. And 34% of it is inadequate consequences for poor performance and transgressions. So people will just not do their work. Nothing happens to them, 34%. And then 39% is the instability or vacancy. So just key positions, financial managers just not there. So so just go to the next slide, please, Christina. So this one is the state of the provinces. As you can again see, it's woeful. 75 material irregularities, billions of money going through procurements, same issues. On the next slide, the theme continues. This is just a summary of the different provinces and just a summary of what the findings are. I'm sure we're going to distribute the slides, and please have a look at that, and you can then see what the Auditor General says about each province. On the next slide, we have local government, and this is an area of massive concern. And if you're saying the local government finances are continuing to worsen and highlighted by the Auditor General himself, it's not my highlight, increasing indicators of a collapse in local government finances. The Auditor General is concerned about an absolute collapse in the local government finances. And the next slide shows a number of local governments that in their own financial statements, they disclose significant doubt in their financial statements as to whether they will be able to continue operations in the near future. Look at those numbers. And it's not small municipalities. Newcastle are on there, Sedibeng are on there. 8 of the 9 provinces have got municipalities that are saying themselves, not I'm saying it, themselves are saying, we are uncertain whether we can continue operations. This is an exceptionally bad reflection on the way that our local finances are being managed. So let's go to the next slide. It's really a bad situation where we are. So let's get back to that core question. There's nothing wrong with our tax system per se, other than the personal income tax rates. We've got a world-class Commission of Inland Revenue. We've got a world-class and highly respected top management, and we've got an excellent system there. The problem comes in the application of it. The money is just simply not spent on it. And what I'd like to see? I'd like to see more accountability. I'd like to see the public of South Africa actually demanding that the money that's been contributed is spent properly and wisely. I think in many instances, we need to stimulate the economy. Many people are saying to me, it's just too difficult to do business in South Africa, not because of the tax rates, but of concerns on labor-related issues, concerns about that the procurement processes are often skewed, not in favor of the excellent product and the delivery, but in skewed of other things. I've seldom seen foreign investors coming there and say, I'm not going to invest in South Africa because your tax rates are too high. But every time they say safety and security, reliability of infrastructure, reliability of electricity, and nationalization of resources. That's our concerns. So those are the key questions there.
Johan, thank you very much for that. There's so much of key points that we've managed to get out of this. And if I use our panel or looking at our chats and use that as the acid test of what our South African citizens are thinking widely, if I look at what Mampoetsi and Caitlin and Daryl are saying in their chats, and it directly correlates back to what you are saying. Because of corruption, your tax revenue is lower. It's very begrudging. But if you knew that that money was being used for better infrastructure, so as Daryl mentioned in his question, in more sophisticated economies and countries, the money is being used for better public transport. So there's no need for the cost of car insurance and cars, etc., although we're in the insurance industry. But that's the reality of it. But most importantly, we've identified areas that need to be fixed. And it's not as if there's not elements or structures within the government that are not saying it. As you said, the Auditor General's report, 89% of those findings are unactioned. But what we are realizing is that South Africa is under severe threat. We need to educate our people. We need to make sure that we hold our people accountable. And we are a very, very democratic country. So we as individuals need to exercise our voices in terms of what's not right. And if you look at what's happening with the negative impact of COVID-19 lockdowns, in 2020, the impact to SARS collection was huge, where SARS themselves said they expect to have only 6.9 million taxpayers in 2021, which will be down from 7.6 million in 2019. And then if you look at what PwC was saying in their recent online article, that hundreds of thousands of low-skilled workers lost their jobs in 2020 with little to no income, placing them below the personal tax threshold, which then already puts and forces there to be more pressure on the already shrinking tax base. So if I had to ask you the question, Johan, and perhaps you can give us more clarity and more insight onto this. Taxes takes the shape of many different percentages during the course of our daily lives, as you've very clearly illustrated to us. There are taxes on our incomes, taxes on our properties, taxes on consumption, to name a few things, like this very wonderful sugar tax. What would be the impact of suspending? And I know that you've said that in relation to what's happening internationally, our VAT rates are in line. What would be the impact of suspending at the very least VAT during hyperinflationary times or periods of national disasters to help the common person afford to live off a basic income?
No, Christian, it's it's a very difficult question. And I was actually thinking about the insurance industry itself, because the insurance industry is actually setting an example to everybody about innovative thinking. You know, in the old days, when I started my first car buying it, then you take the insurance and then there was penalties for you not doing certain things. And nowadays, if I have insurance, I get a benefit for good behavior. So there's been a whole change of system, and the insurance industry is now putting a tracker in my car, and they then give me a benefit for driving well and safely and everything. And I look at it and I say, well, that's not great. I'm getting that money in. So innovative thinking, we have to start thinking differently. We have to start thinking innovatively, same way as the insurance industry, medical aid industry, and all those kind of industry have started promoting good behavior rather than just thinking about penalizing bad behavior. And this is really where we should be going. If we look at what is happening globally, and I've taken out, there's a report from the OECD that covers what main companies are doing globally. So the first issue is the tax packages that they are giving. So tax packages, Christina, on the next slide, they are saying part of it would be reduced VAT, targeted VAT-rated hard-hit sectors. So that is one of the things that is globally being done. And personally, it's never a good thing to reduce the VAT base too much, to have too many exceptions from a policy perspective. But when you look at for example, now the restaurant industry, how hard it's hit, perhaps it's not a bad thing, just for example, to say that in this period of lockdown, on takeaway meals, we'll make it zero rated. You know, maybe you can just save a few jobs in that matter. And the money that you'll have out of the POA, because the person is now continued to be employed, will be more than the little bit of VAT that you save on the other end, because the person is not going to sell any takeaways if you can do that. So I do think there are merits in doing this. So if you look at there are, I think, merits in looking at those kind of things, but often some of it is you don't want to take the VAT below because you actually don't want to create people sitting down in a restaurant, so you don't want to promote that, but make it zero rated on takeaway menu, for example. The ability of it, the contrast actually been seen in many countries. The UK is increasing its corporate tax rate from 90 to 25%. The US is increasing its rates. So the concern is government is actually hungry for funding. They don't have the resources in order to provide tax packages or relief packages. And that is the area of concern. Where is the money going to come from? Currently, we're borrowing it. Is that sustainable? No, it's not sustainable, because normally you'd like to borrow something. I always said to somebody, if you've got to borrow something, at least have something to show for it, so you can look and touch and see it. If you borrow money and then you've got a car next to you, borrow money, you've got a house next to it. Currently, we're borrowing money in order to pay UIF grants and TERS grants and all those kind of things. You want to borrow something as a country in order to invest in education, invest in our people, and now the ability to actually service that's going to be more difficult. So I don't think we've got much room to maneuver in this regard, but I do think it's time to do some way out of the box thinking, and people like the insurance industry is really setting the example for that. So maybe opening the floor to people say, listen, how else should we address this, would be the right way to go.
Super. Now, Johan, thank you very much for this. And I think what you're highlighting is something that is, we're in a very vicious cycle, and it is never ending. And it's so important to understand that. So, Johan, we've spoken about VAT. You've now touched on the fact that South Africa is taking international loans. But what are these loans really for? Is it something sustainable? Is it towards infrastructure development? And we're agreeing that it's not. But what it's then doing is already putting more pressure on us as the taxpayers, because those loans need to be serviced. They can't become due, owing, and payable. And the burden goes back onto this already shrinking tax pool. And I'm looking at one of the comments that came through from Tian. And Tian says, how does RSA's CGT rate compare with the rest of the world? We see more companies moving abroad, especially assets, and in brackets, the intangible assets. And it directly speaks to what we're talking about. But in addition to that, we're seeing the leak going out. But this tax rates, are they not, in fact, turning away our DFIs, our direct foreign investment? And if I could just paint a picture for you, the audience, as well as for you, Johan, so that maybe you can give us more insight, because it's a very important topic to bring to the fore. Imagine if Nike were to build a factory in South Africa. Imagine what that would do. It would aid employment in South Africa. It would create so many other stimuluses. But the question is, and I remember reading a report which said that these organizations or these entities are deterred because of South Africans' tax rates. And again, going back to what you said that's happening at the local government levels, the corruption levels, where people are not buying things due to the quality of the product, or they're not procuring services due to the quality of the product, but due to other reasons. So what I'm saying is...
Yeah, Christian, if you look at a foreign investor, so if Nike were to set up a factory in South Africa and have a company, yes, they'll pay 28% corporate tax rate, which is not really out of line with what everything else is. If they were to sell the shares in South Africa, they won't pay capital gains tax because they are exempt from capital gains tax. So they won't pay any capital gains tax. If they declare dividends, your DTAs will reduce the dividend tax rate, which is obviously standard 20%, to generally 7.5%, which is also not out of line and which is agreed to between the countries. So really, I don't see that to be a major problem. The problem from a Nike investing in South Africa is something different. All the work is going to rock up every single day. Do I have a stability in workforce? Will I have electricity every day to run my factory? Those are the concerns. So if you find a company, and I've assisted many companies in foreign investors and mines investing in foreign countries, you think it's tax. When a mine goes into a country like Congo and everywhere else and want to set out a mine there, they agree, they have a stability agreement with the government of that country, where they say, you will not nationalize what I've put in here. You will do this, you will do X. And they are looking at stability in a country. They're not, the tax is secondary. It's really secondary because your dividend tax and everything is governed by double taxation agreements. Your corporate tax rate is really the only thing that's really deterring you. It's the stability in the country that will make people invest in South Africa or not. What you are raising up, a lot of people in South Africa externalizing their money because they are saying, listen, I want some hard currency and I'm concerned about my wealth. And if I'm going to create something outside South Africa, I'm going to do something through a trust in Jersey or trust in Guernsey or wherever the situation must be. And they set up these kind of structures to do those kind of things. And those are the things that SARS are carefully looking at, because some of them do rely on non-disclosure. So it's the South Africans are externalizing their funds. It's not necessarily, the foreigners are not coming to South Africa because our ratings are not great and our labor ratings are not great and our electricity supply is not great.
So Jan, thank you for that. And I see Caitlin has typed in saying make a substantial increase in the VAT rate and reduce the personal income tax rate. The more the people feel the implication of paying tax, the more they will start caring about the money, where the money goes in essence. So SA should consider a special higher VAT rate for luxury goods. On paper, it sounds very nice, but give us the implications into something like that, because obviously that would have been an investigated model.
Yeah. So in South Africa, we've currently just got the one VAT rate, which is 15%, obviously got the zero rate. In many countries like in the UK, you've got a luxury goods rate. We do have one, it's excise duties. So even if you have a caravan in South Africa, you sell it, you pay excise duties on it. So that is a hidden luxury good rate. So excise duties that we pay is effectively a luxury goods rate that we have. So we've already got it. You must think that, yeah, South African government is very clear in the way that they can fill in taxes. The problem with raising the VAT rate, it is politically, it may sound nice, but it's politically not necessarily the best thing to do. And it's also not fair. We've got too many people that are on the borderline, too many people that will really be hard hit with something like that. And it creates hardship on too many people. Your only real solution in South Africa is to create economic activity. You create economic activity by actually building the infrastructure. And one of my clients was an engineer, and they say it's amazing if you build a road. If you build a road, Then next to the road is they'll build a garage, and next to the garage there will be a shop, and next to the shop then there will be this, there will be that, there will be everything. That's how it creates economic activities. The role of government is that as you put money in, build infrastructure, and economic activities will grow. More people will become economically active. More people will pay tax. The problem is we're paying it, and since 2010 World Cup, have you really seen a real growth in our infrastructure? Not really. We have seen a decline in the overall infrastructure. So there must be a real effort in order to make the infrastructure there. Infrastructure, I'm also saying human capital as well as physical capital.
Johan, thank you for that. So we live in a largely import-driven market for goods and supplies that we know we cannot do without. One of our indirect form of taxes that are levied are on our imports that filter down to the consumer. With the international supply chain and the local currency fluctuations, the price of consumer goods have skyrocketed. So no doubt, as a result of the reliance on foreign manufacturers and the erosion of the domestic market, what could be done to balance the effect of import duties levied to invigorate local trade while ensuring supply meets demand?
Yeah, Kishan, that's an interesting one, because in the olden days, one would put a very high level of import duties in order to stimulate local production. The problem with this is we're part of the global village, and most of these import duties are really trade agreement driven. If you up the imports from a particular country, the import duties from a particular country, that country is going to retaliate. And it's going to do the same thing for exports to that country. So as you up import duties to stimulate local production, you're also damaging potentially exports. And it's important to just look at the way that customs duties are working. So Christina, if you can just pop 2 slides forward. That's just an extract from the tariff of the customs duties. And as you can see there, maybe the next slide. As you can see there, for example, on motor vehicles, if you import a motor vehicle from the EU, you pay 18% customs duties. If you import it from the US or from Japan, you pay 25% import duties. So it's very much trade driven. And if you change that unilaterally, then there's going to be a retaliation. So import duty is not really the way in which you can stimulate growth. It's more about focusing on the other areas.
Okay, super. Now, thank you for that. I see we have Garrett Stokes that has a question, Johan, and maybe we can address this. Garrett wants a comment on the fact that almost all government departments are spending the bulk of their budgets on salaries and wages, with nothing left for new infrastructure or maintenance of existing infrastructure. What are your thoughts on that, Johan?
Yeah, I think there's a big concern that I mean, if you look at, for example, what's happened over the COVID-19 period, there's not one single person in government that's been retrenched. It's just not happened. People are staying home. So paying salaries, and the government is quite definitely overstaffed. And one of the things that's a finding from the Auditor General is that there's no consequences for poor performance by government officials. And obviously they focus on the finance departments, but it filters through. There must be consequences. There must be proper performance management placed into government systems. And I don't want to generalize, because there are many public officials that really, really do their work very hard. My daughter-in-law is a teacher for the government. They work very, very hard. And there are many people, and you should not generalize. But by the same token, there is not, as a rule, there's not a system of performance management and rewards that you want to have in a high-performing entity. Whether you're government, we're not government. And I've done a lot of work on municipal entities, and for municipalities, they are complex environments, and they need highly skilled people, and they do very important work. The people should be compensated properly, but they should also be performance managed properly. And I think that's really where the problem lies. It's not just about a numbers thing. It's about getting performance out of your people that you do have there, actually doing the work that they're required to do.
Okay, so Jan, I think you've summarized it for us very nicely. We've looked at the numbers. We understand what our real tax rate is. We understand that it's not just the PAYE that we pay or the corporate income tax that we pay. It's all those indirect costs by just living our lives is what is in fact needs to be calculated to determine what our real tax rate is. We also understand in summary what you're saying, that more than anything, it's a human capital issue. It's an issue of holding individuals accountable. And at the end of the day, we are responsible for it. It may take a while, but if we look at recent events in South Africa, no one is above the law and no one is above reproach. So I think, as Irfan mentioned, 89% is unacceptable. So the more of us know what the Auditor General is saying, we now need to start holding all those structures accountable and saying it is unacceptable. As citizens of South Africa, we are more than willing to pay our taxes. We are happy to pay our taxes. Show us the infrastructure. Show us how we are building a better South Africa for others to inherit. I think that largely sums up what we've been chatting about today. Would you agree, Johan?
Yeah, thank you, Kirshen. I think any person that's a true South African will love this country, and we are very, very concerned when we see that the country is not performing the way that it should. And if we all stand together and we hold people accountable, and it is a family. It is a family. We should look at it as a family, and we should all recognize that it's not in my best interest to see a person living under a bridge in squalor. It's not in my best interest. We should all take note of that and make sure that that gets limited, gets reduced. You can't have that. But it's also in my best interest that my colleague makes a lot of money on a big deal because that creates economic activity. We're all part of this family. Everybody's success is everybody's success, and we should act that way. But we have to have government responsible and accountable for the monies that gets paid. And that way we can create economic activity and more money to go into the pot and more benefits for us collectively.
So Johan, with 60 seconds to go, I thank you very much. Now, when the session ends, I'm sure you will be adding your medical aid and the pothole that has not been fixed, less the load shedding, to determine what your tax return to SARS will be this year. Yeah, Johan, thank you again for your expertise and helping us unmask SA's real tax rate. Audience, you have been fantastic. I know we haven't gotten to all of your questions. We will definitely make the slides and the recording available. Thank you for being a part of a conversation that matters. I now want to hand over to Christina, but thank you again, audience. You guys have been fantastic. Let's move this topic forward after this discussion. Thank you again, Christina. Over to you.
Thank you very much, Kirshen, and thank you very much to Johan. We all thank you very, very much for being a part of today's exceptional presentation. If we could please hand over to Tshepiso Chocho to close off the session. Thank you very much, Tshepiso. Over to you.
Oh, thank you, Christina. And I just want to say thank you to Kirshen and thank you to Johan for bringing this conversation up. Again, you know, I reiterate Kirshen's words, conversations that matter. I really enjoyed Johan's analogy about the family, how we must view this country as a family and how some support others. I think it's just unfortunate the situations that we find ourselves in. But there was a lot of learning, a lot of interesting questions that came up. So thank you to everybody for participating in our event. Again, thank you to GIFTS for bringing Johan to talk to us. Thank you to the team that was behind setting up such a smooth running webinar. And thank you to all of you for connecting with us. And please look out for more webinars on our social media platforms and join us in the weeks to come. Thank you so much for joining us. And with that, I'd like to say goodbye and enjoy the rest of your day.